And now, for your listening pleasure, here's Opensea and Rose, covering the week of media, marketing, and digital content news. This Old Marketing. Take it away, boys.
Hello, my friends. This is Robert Rose, and welcome to episode number 289 of This Old Marketing, recorded on Thursday, September 16th, 2021. And with me, as always, my good friend, my colleague, and I have to say, a guy who loved Norm Macdonald almost as much as me, Mr. Joe Pulizzi. How are you?
You know,
sad day this week.
So sad because I loved his sense of humor.
Oh, such an amazing comedian. For those of you who may not know Norm Macdonald, he's sort of, I guess, best known as the news guy on Saturday Night Live for so many years, but just as a stand-up comic and just sort of that wry, homespun in many ways, in some ways snarky, comedy. Just there was none better. I mean, nobody told a long joke better than Norm Macdonald.
So good. And his most recent, I think it was Netflix show that he did, is very good. If you wanted to see some, but I saw a tweet from him. It was in one of the news articles covering his death, and it was something like, don't feel. Yes, I'm going to die, but the good news is that the cancer will die with me. So so basically
right.
He said it's a draw.
It's a draw, right?
I mean, that was his sense of humor.
Yeah,
really, really good stuff. So.
Oh my God. The moth joke is still, I love that joke so much. I mean, how do you make a joke about a moth going to a podiatrist and it's a 3-minute joke? It's just so great with the dumbest dad joke punchline ever. But
that's what I loved him for, all the dad jokes, because that's my sense of humor. And when my kids just look at me like, are you serious? And I'm like, well, there are people that appreciate this type of humor. And I always think of Norm Macdonald. So rest in peace.
Absolutely.
To Norm.
Absolutely.
So how was your week? We talked about before the show started, we were both a little bit in misery as both of our football teams, Cleveland and Dallas, pretty much lost by equivalent scores to very good teams.
They did. Yes, exactly. Well, we both played Super Bowl.
Yep.
That's right. I mean, the Chiefs and the Buccaneers were the Super Bowl teams last year, and your team played the Chiefs, my team played the Buccaneers, and we both lost by, yours by 4 and mine by 3, I think.
Yours was back and forth. We were up almost the entire game until the last quarter.
I mean,
but it'll be interesting. So we're going to the opening football game at the Cleveland Browns Stadium this Sunday. So hopefully we'll see a win. We play Houston. You would think think that's a win, but I'm a Browns fan, so you never know.
It should be a win. That should be a decisive.
It better be. There's going to be a riot. I'll tell you that. They really, there's a lot of pressure when you lose the first game, as you know, because you can't go 0-2.
Yeah.
And then you go 0-3, your season's pretty much over.
Yeah. I mean, the conventional wisdom on my team seems to be that they played above their weight class given all of the changes and
Dak
everything that happened from last year. Yeah. And Dak coming back and the whole thing, his first game, and he looked amazing.
He looked great.
And all of that was fantastic. But in the intervening time, of course, we lost our number one edge rusher, who broke his foot in practice and now is out for 6 to 8 weeks. We lost our number 2 receiver in the Buccaneers game, and we've lost our main right tackle it's ridiculous, but he got suspended for 5 games for apparently some confusion over being released because of COVID. Can't be on the team property, but he's supposed to show up for a drug test. Is he supposed to show up for a drug test? We don't know. There's
sounds very complicated.
NFL rules are so, anyway, we'll see what happens. But, we're down 3 starting players. So
NFL needs to take a page book from college. Now you can pretty much do anything. So
exactly.
It went from you could do nothing to you can do whatever you want. Yeah, go right ahead.
That's right.
We don't drug test, especially if you're a big school. They don't drug test or anything anymore. I'm just kidding.
No. Yeah.
Take that. That's not to our international listeners. I'm just joking. They do drug test. This is not at Ohio State, but everywhere else they do.
You worked yourself out of that corner. You worked yourself out of that corner pretty well.
Yeah, whatever. I always work myself back into everything. I don't know, but anything else we need to discuss before we get to?
No, I think let's jump right into it. I mean, let's give the listeners a break from our nonsense and actually do a new show.
You think anyone ever just listens to the beginning of our podcast and says, "Oh, that's all." That's all I want to listen to.
Yeah, they're done with the football talk and and whatever the joke was.
I want to listen to 10 minutes of nonsense. I don't want any
10
marketing
minutes
news.
Of nonsense. Yeah, that's segment number 1, ladies and gentlemen, is 10 minutes of nonsense. And so now we go to the news. We do have a lot of news this week. None of it earth-shattering, but some really interesting stories and a lot of them. So we'll try and burn through as many as we can here and get to it. And, of course, we'll put all of them in the show notes, as we always do. The first one we just have to acknowledge, the first story that we'll cover in this week's episode is, of course, a follow-through from 2 weeks ago, I think, where we saw the rumor that Intuit might buy the illustrious Mailchimp. And guess what? Bum, 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 bum. Dramatic music, please. They did it. This article comes to us courtesy of TechCrunch. And Intuit confirms $12 billion deal. So the rumors were exactly on point to buy Mailchimp. The article opens up by saying, this afternoon, Intuit confirmed persistent rumors that it was in the process of buying Mailchimp, detailing a $12 billion transaction that will bring the well-known email infra company to its corporate remit. Only TechCrunch would use the word infra in the lead to the story. Intuit is not a well-known player in the email marketing space. No, they're not really. That's another very obvious sentence. The company is best known for its TurboTax software and associated lobbying of the U.S. government to ensure its rent-seeking can continue. Its recent purchase of Credit Karma and its more dated acquisition of Mint. The Mailchimp transaction will comprise both cash and stock. The question rattling around your brain at the moment is the correct thing to ask. Why is Intuit spending 10% of its market cap to buy an email marketing company? Per a release, Intuit thinks that the deal advances its powering prosperity around the world and its strategy to become an AI-driven expert platform. Normally at this juncture, I'd, meaning the reporter here, would convert the company's corporate speak to something in English, but I'm struggling, says the author. Well, we could probably help a little bit with that, given our over-analysis in some cases of what we talked about a couple of weeks ago. But anything to add to this, Mr. Pulizzi, on the acquisition?
Well, I think it's funny. Intuit is not in the email marketing space at all. So it's so funny. They say Intuit is not a well-known player in the. No, it's not a player.
Yeah,
not a player at all.
That's right.
We talked.
You
about,
could just say that.
We talked about
period.
This,
full stop.
First of all, congratulations to all parties. $12 billion transaction in the private space. This is a huge deal, and I love it for the marketing space, because it means there are more of these marketing deals to come, and we can talk about them. This is a continual land grab. We're Intuit sees that they want to become the leading expert of many things in the SMB space. Marketing, one of them. So finances, and moves into marketing. There, as we know, there's this clear joining together of what's going on with marketing and finances. And Intuit sees this as an opportunity to say, okay, we can now communicate directly with not only Mailchimp's customers, which are very important, but Mailchimp's customers. That's, I think, the huge opportunity there, where Mailchimp reaches so many more people because the people using Mailchimp are content creators and have large audiences. This is almost like a Trojan horse deal that nobody from TechCrunch would see as the opportunity. You and I can see it.
This is
because they got $12 billion is a deal for this. This is going to go down as one of those Instagram type transactions where they, $12 billion. It's hard to say that that's a deal, but it's going to work really well for Intuit long term. What do you think?
Yeah, I absolutely agree. This is nothing short of an audience acquisition play. This is exactly what they did. They acquired an audience. They acquired the audience of Mailchimp, and they acquired the audience of Mailchimp's customers, right? Which is reach into the ability for Mailchimp's customers, now Intuit's customers, to be able to leverage Mailchimp for things like invoicing. Because as I'll put it this way, as a small business, as a QuickBooks user, their email capabilities to be able to email communications and, quote unquote, your CRM capabilities within QuickBooks, which you want some of. You don't want all, you don't want QuickBooks to be your CRM system, don't get me wrong, but you do want the ability to say things like, hey, I want to automatically send an email to my customers to say, hey, you didn't pay your invoice, or hey, this invoice is now due, or hey, I want to, do some sort of customer relationship management with you that has to do with finance. And that leads me to something that I know, both you and I are big fans of Professor Galloway, and Galloway's been talking a lot about this sort of aggregation or consolidation of the fintech and social space. And I think this fits right into that, which is whether you call it the content creator economy, the content entrepreneur economy, basically the small business ability to start to get more sophisticated about finance. This fits right into that, because the ability to communicate with its customers and create those tools is a huge piece of what they're doing here. And this was, that's the strategy behind the Mint acquisition, right? Giving individual people the ability to have that, that capability and have the knowledge and the education and all of that. And also now with the acquisition of a Mailchimp, the ability for small businesses. Because let's also not forget that Mailchimp has been making huge investments over the last 5 years into content platforms. Sure. From podcasting to magazines to websites to email newsletters, they are a content juggernaut. And we've talked on this show about, we're like, yeah, they're doing too much. They're doing too much. They're focusing too, they're doing a lot. We've been a little like side-eyed about that. And now it'll be interesting to see, with the resources and scale that something like Intuit has, what they can do with some of those content platforms. They make, and
point.
By the way,
that's a great point.
2 months from now, I'll predict we're talking about headlines that get sent to us like Intuit, and maybe not 2 months, maybe 6 months from now, we're going to start to see things like, Intuit closes up, Mailchimp's newsletter, or, Intuit closes up this thing, right? They're going to start tidying up the house, as it were, and we'll see some, tightening up of the ship. But I think overall this is a huge play for them that goes well beyond just getting into the SMB,
Sure.
Email space.
Well, no, it's a great point about Mailchimp. I've been very critical of Mailchimp when they started their Mailchimp Presents program, which is a content marketing initiative that started with like 10 or 12 different shows, podcasts,
right,
and video series and documentary series and all that. And I said, you can't be great at all those things at one time. Start 1 or 2, not 12. Now, that is definitely not going to work from all those shows, but from getting attention from somebody like Intuit, who already sees the value of content marketing and knows it, because from buying content platforms like a Mint, it probably added to the value of the sale. I would have to think that they'd say, hey, we know how to do this. We are our own little mini media company as well. The second thing and you talked about this, with just the value and the growth of small businesses. The New York Times and the Wall Street Journal have talked incessantly about this boom in entrepreneurship. We all know that a good portion of those audiences, of those companies that are being started. I'm sorry, I'm not even cutting this, folks, because there is somebody outside my window holding an elephant and squeezing it into the side of my house.
That's right.
I don't know what's going on right now, but I'm just going to talk through it. The point I'm trying to make, before I was so rudely interrupted here, is the fact that all these entrepreneurs, all these small businesses, a lot of them are content creators. And if you look at the Tilt research that we just went through, we have 1,400 entrepreneurs. They average about $10,000 in startup expenses to cover these things. A lot of those are email marketing services. A lot of those are financial services. So you're seeing so many more of these small businesses launch, and Intuit might be at the center of the creator economy, as you said, with a huge opportunity and leg up over everyone else.
Yeah, I think that's a great observation as well. I think, so if we haven't made it clear enough, we're bullish on this acquisition. I just checked the stock price of Intuit. It seems like the market's going meh, whatever. But we'll see. This might be a good time to buy.
They probably don't get it though, right?
I would guess that the market right now is going, oh, okay. Yeah, they see it for what TechCrunch is basically writing about, which basically, they use the TechCrunch article uses the word grokkable, which already makes me cringe a little bit. But they say the way that it is grokkable is that that they see it as a play for the small business in getting into the small business infrastructure of MarTech. And, I think that's a very small piece of this story. I think that's
It's so funny because you mentioned Intuit stock, so I go to it and it's up 5% over the last month, which is fantastic. It's 21,000% up all time. I mean, if you put $1,000 in that from the start, you'd be a multimillionaire. So just throwing it out there. It's like it's a good old fashioned Dogecoin.
Yeah. Which has not been doing that great lately.
I think it saw its run. I think that it's very hard to top, 17 million% increase in a year.
Yeah,
so
that's true.
How much higher do you want to go? It's one of the largest entities.
I need it to go a little higher. Let's put it that way. Just a little bit.
I can't believe you own Dogecoin.
Oh, I own Dogecoin now. I own Bitcoin. I'm in Ethereum. I'm in Cardano.
See, I see the use cases for every one of those except for Dogecoin. There is no use case.
Yeah. I bought Dogecoin. I bought Dogecoin at a joke. Yeah, I bought Dogecoin for the meme factor. I think I bought $100 or something of it. But yeah, Cardano and Ethereum are my bigger plays. Okay. Let's move on to our next story here. Let's start burning through these news stories because we got a bunch of them. This is a interesting one, and comes back to the continuing saga. We should have, what we should have? We should get soap opera music here, because it's the continuing as the NFT world turns, and we should get good soap opera here because this episode of As the NFT Turns has us back to Opensea. Opensea, of course, the eBay of NFTs. And this also coming from TechCrunch, by the way. The article's headline, Opensea admits incident as a top executive is accused of trading NFTs on insider information. Dun, dun. Yeah. Get the Californians going here. The eBay of NFTs. Sorry, maybe I'm the only one.
Yeah, I think you are. Actually,
the eBay of NFTs
I think it's just you.
Is running into a scandal as it admits one of its employees traded the crypto digital assets using insider information from the platform. Yesterday, a top executive at NFT platform Opensea was accused of front-running sales on the platform, purchasing pieces from NFT collections before they were featured on the homepage of the platform. According to Twitter user ZooWooTV, the startup's head of product was using secret crypto wallets to buy drops before they listed on the main page of Opensea, selling them shortly after they were highlighted publicly by Opensea and funneling the profits back to his main account. How does that guy not know that that's going to get called out? I mean, just ridiculous. Users linked a handful of transactions from account linked back to the executive on the public blockchain using an NFT drop that was, at the time, actively listed on the front page of the platform. Then they show a couple of tweets from ZooWooTV and basically go through the rest of the article saying, there's trouble. There's trouble with a capital T, as they say, in Opensea. What do you think about this, Joe? Is just a blip, or is this the sign of things to come? Insider trading in the world of NFTs.
No, I mean I think it's a thing. I mean it's just like you'd see insider stock trading. You're going to see this type of thing as well. If you have knowledge that something's going to go on the front page of Opensea, It's just like being on the front page of Amazon, where generally those products sell. So if whatever the process is, where it's a highlighted NFT project and it goes on the front of Opensea, those things are going to get purchased because there are people with a lot of ETH and they're ready to spend it on whatever, baby llama little frog project comes along. It's just a thing. So I think there's probably an incident or two of this happening.
Only in 2021 do we start speaking like this, right? This is a whole thing now where baby llama, dad punk sheep, stirrer is going to be like, oh, really? You got baby llama sheep stirrer? Well, oh my gosh, I'm really going into the dapper dinos. It's like.
You got so. But let's talk about this for a little bit because it's important. I was having a conversation with Mark Maxheimer, our director of training, about this the other day. Yeah, you have many, many very successful projects, and they do very well. The ones that are doing well have a long roadmap. They are building an audience. They're building a community. They're successful from that standpoint, and it's not just a JPEG. They release. There's ongoing things that deliveries, airdrops to the owner of the NFT. Just like if you had an email marketing system, if you will, that you could deliver content ongoing. This is a real thing that content creators need to know about. And then you have, for every one of those amazing things, you have 600 pieces of trash that people are trying to, get rich quick. So there's a lot of that going on right now, a lot of pump and dumps. There's so many automated bots in Opensea right now that they'll basically buy when something goes below floor and then quickly resell it. It's really kind of nuts, some of the stuff that's going on. Yeah. Long story short, I think this is small news, but the bigger issue, the bigger story is that Opensea is this huge gargantuan thing now. All of the NFT platforms are now, where every month they're generating more in revenue than they did the previous year. It's nuts.
That's right. And I think you bring up an excellent point, which is the need to build the mythology, right? If you're so you and I have had plenty of fun chats and arguments and debates about the efficacy and usage of NFTs, as art specifically, and I'm sure we'll have that. But if they're going to be successful, because if you look at sort of the medium from which this emerged, right, and you were huge in this back in the day, the idea of baseball cards and tradables and football, but the key, what makes them valuable, is not the rarity itself. It's the rarity in context with the mythology that's been built up, right? So if Hank Aaron had been some no-named, player that played for a couple of years and didn't really, do much, well, his baseball card would not be worth that much. But because he's Hank Aaron, his card is worth, and I'm making this up because I have no idea about what I'm talking about. But the point being, it's the mythology that is built up around that, the community that is built up around that, to use your word, that makes things valuable, right? Mm-hmm. The reason that a tradable Yoda doll right now, or a tradable Star Wars character, or a tradable doll or action figure, or whatever you look at as sort of being that, is the rarity plus the mythology, the popularity and the community and audience built around the mythology of Star Wars is what makes anything Star Wars valuable. And then you apply the rarity of the thing, right? And so if NFTs are ever going to be successful, if any kind of NFT, so the reason that CryptoPunks is successful, yes, it's rare. There's only a few of them, but it's the mythology that has grown up around their origin, and the fact that they were one of the first, and the fact that there was a whole thing about them, and then who bought them, and that mythology has continued to foment the value of those things as being valuable. And you're exactly right. If the ones that are going to be successful here, they're going to be the ones that can, quite honestly, build a content marketing and story strategy around what they're doing.
It's interesting. We've been watching this whole thing. Have you heard of the Crypto Dads project?
I have.
Now I've been doing a lot of research on it. Actually, Jared Morris, who works with Brian Clark over at Unemployable and the other products over there, we've been talking about this, and he's interviewing the founder, Anthony J. Of Crypto Dads. Now you think they just launched a bunch of NFTs. By the way, they're 10,000 different crypto dads, and they look sort of like something you'd see on Fox Animated. Broadcast, that kind of thing. Really interesting. They're all different, but they spent months and months ahead of time cultivating a community and an audience and building a roadmap and getting people to buy into that over time. And that's why when they launched last week at 0.07 ETH, now you can't get one for less than 2 ETH. That's at a real. So basically you've gone from $100 to $8,000. For one of these things. That those things don't just happen. You might think that they're silly, but this was a content marketing roadmap that they built, and they've done a great job of it. But I love what you're talking about, mythology and story, and when you bring up baseball collectibles. I'll give you a really good example of this. I collected Jim Thome cards for years. Jim Thome, first baseman, third baseman, DH for the Cleveland Indians for a long time, hit 612 home runs, eighth all time in home runs hit. His cards are not worth that much compared to, let's say, a Mickey Mantle who's hit 536. So Jim Thome's hit 80 more home runs than Mickey Mantle, but Mickey Mantle cards are worth 1,000 times more because there's an amazing story behind that.
That's right.
And I think that's what you're trying to tell, is that these NFTs can be a great way and a conduit to build a long-term relationship with an audience. But you have to have a plan and a strategy. And it's the same thing that goes with, I was just talking with somebody the other day we were talking about it with creator coins, with Rally. And we were talking about, Tilt Coin's doing okay and whatever. And we both were talking about the fact that if you're going to launch something like that, you have to have a strategy for how you're going to deliver value to the audience over time, not just the coin.
Yeah,
the coin is just a way to facilitate that value. It's not the thing. And people get lost as NFT's the thing. NFT's not the thing. It's just the facilitation method for great communication, content, artwork, building a relationship over a long period of time. So
that's right. And it's also, by the way, why I'm still bearish and don't like the idea of brands doing this as a stunt. Right? I'm not a fan of Bounty coming out with their, NFT bounty package, right? Where they create a JPEG, because that's all they're doing. They're just creating a JPEG and basically you're saying, the Bounty brand, which I can go get at my local grocery store, they haven't built a mythology. There's no mythology there, right? There's nothing there that builds any kind of story or value. And so I think those things are fads at best.
Here's the different way to look at it. What was I looking at the other day? Forbes magazine, Fortune, I think it was Fortune magazine. They did an NFT of one of their covers a couple months back. Sold it for like 5 ETH or 6 ETH or whatever. They had multiple versions. Great. It's just a picture. It's just a great, and it moves a little bit. Great. That's just playing on the collectability of it. It's newness. That thing's gonna fade.
It's a total fad, right? I mean, somebody's gonna buy that for 5 ETH, and that's where it's gonna stay forever.
But let's say that you're Anheuser-Busch, and you go and pay whatever you paid, $90,000 for beer.eth, and let's say you go and get an NFT from beer.eth, and every month you're sent a different beer, or a special amazing content experience, or you get let in to events around the country because you're part of this first VIP NFT for beer.eth. Those are the things that you have to think of about the ongoing experience after somebody buys the access through the non-fungible token. So,
yep.
Great point.
Good stuff. Good stuff. Wow, we agreed on NFTs. This is...
You're coming around, my friend.
A new episode on As the NFT Turns. And that's cue music, cue Californians music. God, somebody needs to do that. Somebody
nobody needs to do this. Only you want it done. Nobody else wants
I want it done.
We'll be right back. Starting a business can be overwhelming, and a great way to make it simple is to go step by step. The Dot Online Business Academy offers simple, easy to follow, and completely free courses to help you find a business idea, create a business plan, build a website, and more. The short videos, bonus activities, and resources give you everything you need to take your business up and running. Hosted by industry experts such as Ryan Folan, Jason Falls, and Kim Garst, these courses also come with interesting activities and exciting prizes. For more information, visit academy.get.online. That's academy.get.online. And now, back to the show.
I'm going to do it. All right, let's move on to our next story here. Let's burn through these stories here as we get to them. This one comes courtesy of the Daily Variety, my hometown news magazine here in Los Angeles. And yes, we're talking about Clubhouse. We haven't talked about Clubhouse in probably 2 or 3 months. And Clubhouse has made a little bit of news, which is interesting because now Clubhouse is on page 4 of my iPhone because I just don't care anymore. But Clubhouse hires NPR veteran Nina Gregory. The article from Variety opens up by saying Clubhouse, the live audio chat startup, has hired 15-year NPR veteran Nina Gregory as head of news and media publishers. Gregory most recently was senior editor on NPR's Arts Desk, where she had overseen coverage of film, TV, art, design, fashion, food, and culture. In her new role at Clubhouse, Gregory will be working with media brands on engaging with the Clubhouse community. She is also tasked with working on helping news organizations use Clubhouse, connecting with journalists, and developing audio training opportunities at journalism school. And then it goes on to talk a little bit about Gregory's resume and all of that. And she's a very, very accomplished journalist. Does this signal a direction for Clubhouse, Joe, or is this just something that they're hiring a very accomplished, ostensibly influencer manager?
I think that well, first of all, we've talked about it many times. Clubhouse doesn't have to be Facebook. It doesn't have to have all the audiences. It can be more like a Twitter.
Well, it kind of does to justify that. It kind of does if it's going to justify its investment.
I don't know if it has to anymore because if it's just like a Twitter where you don't have everybody, but you have certain people, core people.
Yeah, but Twitter can't even be Twitter anymore. I mean,
Twitter's doing okay. I think Twitter's going to be just fine if they're
going to get bought at some point.
Yeah, they're going to be just fine and they'll get their valuation and everybody will be happy. But I think that if they just focus on their core creators, and that's what this is they need somebody to come in and shepherd and talent and help them move along and figure out how they're going to build audiences and monetize. And I think that's what this is all about. And you've got all the other major platforms, YouTube specifically. Now you've got Twitch doing it, where they've got these creator funds. LinkedIn just announced a creator fund. Everybody's focused on how do we help these creators help us. And this is part of it. You have some really, really amazing shows on Clubhouse, and you have some really horrible things. Maybe more horrible things than good things. So we've got to go in there and they've got to say, look, we've got to have 100, 200 really amazing shows that are happening all the time to build this audience and become a thing. And that's what Spotify did. Some they purchased, some they grew organically. I just think this is what you're seeing, and this is the natural progression of it.
I think you're right, and I think this is Clubhouse chasing Spotify at this point. It feels like to me. We've talked about how you're right that Clubhouse doesn't need to be Facebook. It doesn't need to be Twitter. It doesn't, it could have leaned in long ago to that sort of talk show format. And in fact, I think that was the original name of the app, was Talk Show or something like that, where you are actually aggregating an audience in a live audio format, and it becomes a bit like radio, right? It becomes a bit like a place where you can go and see and hear radio, audio, where there are shows, there are people talking, and that's basically democratized radio, right? Where everybody, it's sort of the 2021 version of your cable, Wayne's World cable access show, but the positioning out of the gate was this sort of democratized town square where you can go aggregate around topics and create audio rooms around these topics. And what they realize, I think what they're starting to realize, at least this is something I can observe, is that there are not that many people that are interested in covering a variety of things. There are a lot of people interested in covering a few things. And so there are topics in there which are highly competitive, crypto being one, growth hacking or how to be a millionaire being another one, some other issues, political issues being others. And I think, to me, when I see them doing something like this, it's them realizing we don't have enough diversity of what's actually going on in the world in our, and we'll never build an audience, a wide enough audience other than those that want to talk. In other words, we're building an audience, but it's all people who want to talk. And the power of any social media network is not in its content creators, it's in its content consumers. And that's you've got to balance that in such a way that makes that really, you look at all the social media platforms that have been successful. TikTok is a fantastic example of this, right? The balance of content creators and content consumers is right for TikTok, right? There are so many content creators on just so many different topics and content and what you want to see, which brings in the diverse and big audience of content consumers, and that's where the money is made. That's where your money is made, is in the content consumer class. So, and Clubhouse doesn't have that right now at all. You can see the downloads per month. Nobody cares. And it's just going to continue to become more irrelevant and more irrelevant unless they can shake it up. Unless they can start to look a little more like, hey, this is where you're going to come see so-and-so. This is where you're going to get CNN. This is where you're going to get the news, for Gen Z. I don't know what it is, but it's something that needs to be attractive to bring the moths to the flame, as it were.
I think that you are way too down on Clubhouse. I know. A couple of weeks ago, I said I didn't like Clubhouse for what we were trying to do for our strategy, which is fine. But the problem the Clubhouse had is they shot up like the NFT market did earlier in the year. And everyone's like, oh my God, it's so... Okay, yeah, they're not seeing 1 million downloads a month now. They're seeing 300,000 downloads a month. Oh my God, that's horrible. That's pretty good. If what the company's saying is correct, that they're seeing 700,000 chat rooms created daily, doubling from May, and people are spending, on average, 70 minutes on the platform, that's pretty damn amazing. Come on. They just started. So if they just keep on this trajectory, doing nothing else but growing at 200 to 300,000 downloads a month and averaging 60 minutes or so per session, it could be one of the greatest social platforms on the planet. Right?
No. No, I don't agree. I agree if they could do what you're talking about.
But they're already. But I'm saying they're doing that right now. We don't have any. Where's the data that says that they're not going to continue to do a couple 100,000 downloads a month, which is great, and they're not going to drop from 70 minutes to 2 minutes in engagement? So there's something here, right?
Maybe.
It just started. They're not even a year old, right? Or they're about a year old.
Look, the challenge I have with this, with Clubhouse, is not that I didn't believe that it could be a good, small, niche player in the space. And by that, I mean, I don't mean, it needs to be small by, our standards of small. I mean small in the world market kind of small, right? Not Facebook, not Tencent, not Alibaba, not Twitter, not a global player in this space. And the interesting thing to me will be how they manage their top heaviness, because the company is so top heavy now with investment. It's just going to be very hard if they're not going to become a category killer to keep that top heaviness, right? To keep investors happy. And if you can't keep investors happy, then, at some point, you have to either get acquired or you have to just keep running, right? You just keep running, and we'll see. I am. I'll put it this way: I am bearish on Clubhouse as I was on Quibi. So,
oh man, you cannot put those two in the same category.
No. I know. I know they're not. I don't think it's the same. I don't think it's the same cadence of trajectory down, because I think Quibi was doomed from the start. But I do believe that you're not going to see Clubhouse survive for 5 more years.
I don't know. I would imagine you're talking about their VC funding, and A16Z is probably extremely happy with their unicorn of Clubhouse right now. I think that they're going to be just fine. Now, I don't know. I don't know if it's going to exist as Clubhouse in 5 years, but it would be somewhere at some piece of some company that bought them for probably $30 billion.
We'll see. When they finally announce some sort of business model, I'll say more. Right.
All right.
Right now, I'm just very skeptical, because at this point, I just don't see the business model. And look, I'm dopey, right?
You remind me of. Here's what you remind me of. You remind me of Edward Saverin talking to Mark Zuckerberg about putting banner ads onto.
Are you Zuckerberg in this? Are you Zuckerberg in this story?
Facebook. Yeah. So that they could monetize the Facebook.
Yeah,
that's what you remind me.
Are you? Yeah, you're Zuckerberg in this story.
No. I'm nothing. I'm nobody. I'm just saying.
I see.
Sometimes you have to give these things time to play out. Let's see where it goes.
Yeah, very well. All right. Let's move on to another story, since we're burning through these and having fun. This is another interesting one here. It's about, and it sort of swings right into what we've been talking about, which is, of course, marketing and where we're feeling and acquisitions and all those kinds of things. Marketers' optimism hits its highest point since 2015. This story is coming to us courtesy of the Media Daily News, which of course is a section within the Media Post site. And the article opens by saying, the optimism of marketing executives about the U.S. economy has reached its highest point since 2015, according to the latest edition of the CMO survey. The survey, a collaboration of Duke University's Fuqua School of Business and the American Marketing Association, is based on responses of 282 marketing executives polled in August, and it is based on a 100-point scale, with 100 representing the most optimism. August's 69.6 optimism rating is up 3.3 percentage points from the last survey in February, and up 18.7 percentage points since June of 2020, when marketer confidence in the U.S. economy reached its lowest point since the survey has been fielded. Optimism regarding the U.S. economy's next quarter, that's Q3 2021, compared to last quarter, also showed a stark increase from June of 2020, but a significant decrease from February of 2021, with only 32% of marketers stating they were more optimistic. Basically, the article then goes on to sort of cite some more data, but says ostensibly we've basically seen an increase and comeback a little bit, and some of the, there's still some uncertainty around the Delta variant and all of that. But generally speaking, this seems like pretty good news. Anything you take out of this?
It seems way too optimistic. Well, for two things. So that's the first thing. The second thing is, did you watch the video associated with this one? Did you go through that?
I did not.
It's fine. They go through all the different findings of the CMO survey, and they talk about the different responsibilities of the digital marketing leader, and content creation, content marketing, content anything is not on there. It's just weird. You have social media, and
it's AMA.
I don't.
It's
yeah, why? Well, I mean, you subscribe. There's. It's almost like we went back 10 years, and they just keep using the same survey over and over again. So that's the one thing that bothered me. So I right off the bat, I'm like, as much as this survey does a lot of good in some ways, I don't think it is a real interpretation of what's going on out there. The second thing I would say is there's a 58% of the total marketing budget is spent on digital now. Now, you might think that I would say that that's a good thing, and I don't think it is. I think it's too much. Yeah. I think that there are such huge... Now, I get why you might not want to go into the event business right now, but I think there's way too much opportunity on the print side. There's other opportunities that I think have been in such a bear market for so long, we don't even see them as opportunities anymore. And I mean, frankly, if I was in marketing, if I'm a CMO, I'm looking at starting a state-of-the-art print magazine right now for my core audience, because they're not getting any decent mail. It is all crap. It's all we're getting, and we're still going to get the mail 6 times a week.
Yeah.
So what an opportunity that is, and I don't think any of these CMOs see it, because everybody's talking about, we got to be on social, and what are we doing from a digital standpoint, and even into NFTs and all this other stuff. And we're not thinking about good old-fashioned, traditional marketing from the print standpoint is something we need to look at. So it was just missing.
I agree mostly with what you're saying. I think, and this is, I would say from our, what I typically call my walking the dog survey, which is just literally talking with people that that are sort of in my circle, which include all the clients. We've done at this point in the year, so here we are at mid-September, and we've done, I think, 25 engagements with large notable brands this year, all of which I've spoken with some level of senior leadership in the marketing group. And, and then, certainly social conversations, conversations and interviews and other podcasts and all those kinds of things and if I had to lump all that stuff together into a giant pile of data, which I totally get is anecdotal at this point, I would say that the sentiment, I agree with the sentiment. I agree that most CMOs, marketing leadership in organizations, are feeling good about the future, with a huge asterisk saying it all depends on what happens in the next few months with this Delta variant thing, right? All depends on COVID. And, I think in so many ways, the politicization, I don't know, however you want to say it, but of the disease has caused true uncertainty in the marketplace, where there's a hesitancy, because the other, sort of, if you look at the tension of this, Gartner has come out and said, look, budgets are lower, there's concern about marketing spend. We've covered that on this show before, sort of we see advertising budgets up, but we see marketing spend down, and we see the shifting of money. And I totally agree, by the way, that a lot of that money is getting shifted into brand and content and customer experience, because digital customer experience is truly where a lot of CMOs are focusing their attention
and rightfully
right now,
so.
Which is,
and rightfully so.
Yeah, absolutely, right? It's small move, curbside and, e-commerce and all the things that are happening because it have been accelerated because of the pandemic have really shifted things. And so totally get all that. The sentiment I see is being rather bullish. And what we see out there is sort of a we're ready to go once you unleash us, right? And where I think that starts to lead to is, and you're right, this study doesn't cover that at all. It's like, all right, well, if you're feeling so positive, what is it you're feeling so positive about doing? That's the real question, right? It's like, who cares how you feel? What are you going to do because you feel so good, right? And so the anecdotal answer to that, at least from what I see in the marketplace, is a very big focus on brand messaging, the social corporate responsibility, ESG for public companies is a huge thing right now. And levels of getting to better digital experiences for customers are sort of the priorities that I see, right? So that, and you can read into that targeted content, personalization, data, first-party data, all these things are becoming huge priorities for, I think one CMO that I talked to literally just last week said it very well. He said, look, we have to build an engine because if we're not building an engine that connects our brand to the customer experience and how we're doing that in a digital and content way, then we're gonna fall on our face, because we're in a marketplace right now that is really noisy, really competing with news and the deep divide in the country. So we have to be connecting trust in our brand to the customer experience that we want to create. And so what does that mean? It means content marketing is winning so much, and CMI's research points to this. Big bullish budgets, team size, focus on content marketing in the next 12 months. And I just think that makes me feel good, obviously, for the obvious reason, because it's the business I'm in. But I think it also speaks to where we are, where CMOs are right now.
We'll see. Yeah, it's of course, you take the survey for what it's worth. There's always good things and bad things. But it's just, those are the things that I looked at. I think the other thing is, it's just when I go get the mail every day, I'm just befuddled by the nothingness.
I'll tell you, here's the punchline then. Here's the funny punchline. This CMO that I'm talking to, his biggest priority right now, he wants to launch a print magazine. Yeah. I didn't want to bury the lead like that, but as soon as you said that, it reminded me that his big thing is, he said, I want to be in my customer's mailbox. And he's a B2B organization, by the way. So he says, I want to be in my customer's mailbox, because that's part of our customer experience that differentiates, because nobody in our marketplace is.
I love to hear that. And I think what you're going to see during the holiday season here, you're going to see Amazon and Walmart spend so much more money this year on their print catalogs. You're going to be astounded. You'd be like, oh my goodness. And that's when the tide turns, right? You're getting the leading e-commerce companies in the world, digital companies in the world, that are starting to rethink and say, oh, it's not just digital. That we have customer experiences many different ways. We can lead content first to do that properly, in many ways. So there you go.
Yeah.
Good.
Yeah. All right, ladies and gentlemen, it is now time for your favorite part of the show, the empirically proven favorite part of the show that we haven't said in a while, which is, of course, our rants and rave section, when Joe and I go off on a little bit of a rant or a little bit of a rave over something that makes us feel, well, I'm not even going to bring Norm Macdonald back into this, because it's just so sad. I have a bit of a commentary, but you want to go first? Do you want me to go first?
I want to hear yours.
Okay.
I know it's going to be interesting, as always. But I wanted to get this into the show notes, because I think it's very important. You and I have talked about DAOs before, decentralized autonomous organizations. They need to have a better name for that. But anyways, it's...
Somebody's going to come up, by the way, with the whole DAO of, the DAO of banks, the DAO.
Oh, it's
feeding off of the Chinese DAO.
Oh, yeah, you're probably right.
Trust me, book titles in 3, 2, 1. Okay, there you
go. The DAO of DAO.
Yeah. Exactly.
So there's this report that's being done. I'll put this in the show notes. It was curated by Gitcoin and the Bankless Dao. By the way, Bankless LLC is an amazing newsletter, video series, podcast series, all about the crypto, NFT, ETH side of the industry. They have started their own DAO called the Bankless Dao, and they're really focusing on what makes them work as well. So they put together this report just FYI, if you don't know, a decentralized autonomous organization, according to Wikipedia, is an organization represented by rules encoded as a computer program that is transparent, controlled by the organization members, and not influenced by a central government. So if you think about a DAO as a new entity, like you would see an LLC or something like that, it's governed by the collective, and there is ownership based on usually some kind of a token. So people are, in the community, they get compensated for maybe initial stake, or they might get compensated ongoing for the work that they provide. You're seeing launches of DAOs all over the place in every industry, and what you're really starting to see is this power of the collective. And also, since a lot of people don't know what they are, this is a really good overview about what DAOs are, who's involved in it, how many people, what are we talking about? I mean, generally, you have a fewer amount of people working in many, many DAOs. So if you're a content creator, you might think, oh, if I'm a content creator, I can go ahead and build my own e-newsletter and build my own platform. Well, that's absolutely one way to do it. But you could also say, my expertise is in Solana, cryptocurrency, and I'm going to add my expertise to 3 or 4 different collectives. And I'm going to get compensated that way. I know a number of people that are doing that right now. That is something that didn't used to exist. So now there's a way that those people can get paid, and they're generally in some form of the DAO token. So it's just really interesting. I wanted to share it. I'm really bullish on the whole thing, not for the name DAO or not for the thing itself, but the power of the collective and the idea that you can be a part of a community. That community can then be compensated and actually have ownership in something as they're working to build. So it's not a passive audience member. Everyone becomes sort of part of the community. They engage in the content, and they also add to the content. And I think this is something we haven't seen before. So I'll add it in the show notes.
I think it's good. I think it's fascinating, and I think you're going to see, really marginalized communities really get empowered by this, right? So whether it's, economic marginalization, people of color, indigenous communities that have historically had trouble with banks, start to band together into this and build in, total economic systems. And so it's a real, fire under the butt of banks and traditional financial institutions to, this is going to get competitive fast.
Well, right? You can do a lot of things. So think about it this way. I talked to somebody the other day that is a New York Jets fan. So besides Gary Vaynerchuk, this guy, is a Jets.
He's the other one.
He's the other Jets fan.
He's the other one.
He's not happy with the way the Jets are run, like most Jets fans.
Yeah.
And he was talking about getting, hundreds, then thousands of people together in a DAO, in a collective, to create enough asset value in the entity to buy the Jets. Now that you may be thinking that's the craziest thing ever. Well, it's not so crazy. You get enough people that put enough money into it, and some of these DAOs, it takes, like there's a Friends with Benefits DAO, which is one of the original DAOs. It's all about crypto. You have to have quite a bit of ETH just to get in and be part of it, and there's a lot of people that pay to be part of that community. So you could see these things start to happen. So.
Yeah, there you go. Absolutely. Right. Absolutely. And by the way, just fun fact for those of you who were listening 5 minutes ago when we talked about the DAO of DAOs, the DAOofDAOs.com is taken.
I
went to go register. Yeah, I went to go register it, and it was already taken. So I saved
the DAOofDAOs.eth taken?
GoDaddy. Probably not.
No, it probably is.
I'm not going to spend another $300 in gas fees trying to register another
extension. For those of you who don't know, the .eth extension it's a fad like the .com extension was. Although .com was never a fad. More like .mobi.
There's a land rush to it. Yeah,
would have been more like that kind of thing.
There's a land rush for it, for sure. Quickly, so I have I guess it's commentary or a rave. I'm not sure which article in this site. By the way, What's New in Publishing. If you're into publishing, content marketing, bookmark this site. It's just good. Their stuff is really, really good. The article that we'll link to in the show notes is the headline is Building Trust in a Sizable, Disengaged, and Indifferent Audience, Publishers' Insights from the Reuters Institute. And the article goes through some research that they've just come out with, the Reuters Institute for the Study of Journalism. And it's basically talking about trust, and trust primarily in news media. And the research is, for those of us in marketing, I just want you to replace, when you're reading this article, just replace news media with marketing, because I think they're exactly the same. Obviously there are differences, but I think the lessons learned here are incredibly similar, especially for those of us who are focused on content marketing and building value through content. And a couple of just the insights that I'll just mention here is one, probably surprise to no one, trust is really, really low, right? There are, in the United States, and they did this pretty much globally, India, Brazil, United Kingdom, United States, they looked at trust and, trust in zero brands. In other words, we trust no news media brands in the United States is higher than anywhere in the world. No shock there. The trust in all brands of news media is the lowest in the United States. Again, probably no shock there. The interesting thing to me wasn't that, because I think we feel that. The interesting thing to me was the source of that lack of trust. And the interesting thing that they found was it was indifference. In other words, what they found when they looked at this was it's an active distrust, but it's an indifference. In other words, it's not that, I'm out there hate watching things. It's basically the research concludes, and they actually, this is a pull quote, untrusting tends to be among the much less engaged with journalism altogether. Many default to a lack of trust and uncertainty. In other words, it's the people who don't watch and don't care about the news that trust it the least. And maybe you kind of sort of look at that and go, oh, right, that makes sense, right? Because these are people who aren't actually, so it's not the people who are actively watching Fox News or watching MSNBC who trust the least. It's actually the people who watch neither and get their information from other sources that trust the least and are indifferent, and they don't care, right? They're all a bunch of crooks, or they're all a bunch of, they're all a bunch of partisan hacks, or they're all, I'm not paying attention to any of it. To me, that, and what they say, that the article sort of goes on to be a little bit prescriptive about what news media should be able to do, which is to actively start to foster trust in journalism. In other words, the usual tack taken by a news media agency is, and you can see this in the New York Times, did a very successful campaign not 2-3 years ago, where they basically really leaned into the whole brand of New York Times as a trusted source, and it kind of worked. And so what they're suggesting is that you not only need to say, you not only need to assume that great journalism is going to be, or great, content is going to be trusted by your audience, you need to make people care about it. In other words, you need to make people care that what you're doing should be trusted. And so there's not only you need to create great content in this, you need to make people care about that great content, which of course is something we talk about all the time in classes and consulting and et cetera, which is you not only need, it's not just, it's the whole Jerry Seinfeld. It's not just taking the reservation, it's actually holding the reservation, Jerry. It's not just creating the great content, it's actually communicating the value of that great content to your audience as well and making them care about it, because the people that don't like your content and don't trust your content, quite frankly, those aren't the people that you're trying to get to anyway. Those are the active, the ones who unsubscribe from your email newsletter. They hate comment you. They're trolls on your social media, whatever. Those aren't the people that you care about. The people that you care about are the people who are indifferent right now, who get your email newsletter but don't care, right? Who look at your content and don't care. That's where we have to focus. And this is research that points right to that. And I just thought it was just such a fascinating point of view on where trust is. And it's not in the active trolling sort of, people that we would normally assume. It's in the people that we don't see. It's in that invisible majority probably of people that just don't give a shit.
It's interesting. It's a great point. It seems to me that there's an opportunity for non-media companies in this because of the trust issue. But the one thing that you see different, where you see all these content creators that are building these amazing communities, they communicate back. They have some kind of a Discord channel or some kind of a commentary system to communicate directly back with the audience. You don't see that a lot in news media. And I think you need to start to. I would love to see, where you have a comment section underneath an article and it's usually like YouTube spam. You don't have anybody with real commentary, like a communication ongoing. And I would wonder if you started a small media company and with every one of the categories you had your own little Discord group so that people could actually talk about them in a very polite, hopefully polite way. And that's where I think you build a lot of the trust. It's just interesting that they don't do that. They kind of stand at arm's length. Oh, we're the media. I don't think that's the media anymore. So
I think you're exactly right. I mean, I think I was just, and speaking of Professor Galloway, I was just hearing about a service, and while you were talking, I was trying to look it up and can't find it just at the moment. But there's a service actually that now exists where for example, the Wall Street Journal is creating their commenting section, which is basically it's built a little bit on artificial intelligence as well as some human interaction to maintain the quality, right? And it's not what they're looking for is not the active disagreement. What they're looking for is the purposely destructive. In other words, they put out an article and they, if people are having an intelligent but passionate debate, they let it ride. That's a good thing. But if people start putting in trolling comments or things that aren't true or, not, sort of the conspiracy types of theories and stuff like that, those are the ones they delete. And it's sort of built to do that. That's a really interesting business, I think, for how we sort of move forward and start building trust in some of the platforms. It's not just simple as saying we're not going to have comments. And it's not as simple as saying we're going to let all the comments go. And that gets to a whole other topic that we could talk about, Facebook and their sort of stance on free speech and what allows and what's not allowed. And, there is an active participation that we as a community and we as a people need to start to have to build trust in our own institutions. Otherwise we become, I mean, I have a whole thing on this going back to the 1800s and Justice Brandeis and the whole, privacy and how tribal media and all, but yellow journalism and that whole thing. But I'll spare everybody that because
I think everyone wants to hear that right now.
There's some.
right at 106,
right at the end of this right podcast. At 106 in the podcast, right? Exactly. So yeah, where are you this week, Joe?
We actually have Parents Weekend down at University of Kentucky, so we'll be going down and going to the football game and seeing our son, and we'll see how it goes. It should be crazy time.
I love it.
Yeah, it should be. I'm looking forward to that 6-hour drive. What are you doing?
The weather is turning here in Southern California, which is a good thing, right? We're actually getting out of the nasty heat. So we're actually going to have some lovely weather this weekend. So I'm hoping to get outside, get a little sunshine and some cool weather and actually get a hike in and all of that. And then, of course, we're heads down getting ready for Content Marketing World.
Right.
I received my costume in the mail. So I'm a little excited about that, I have to say. A little unreasonably excited about that, but getting ready to fly in 2 weeks. So
yeah, that's crazy.
We'll have to figure out what we're doing on the show.
Presentation today, so the people demanding people they would want their presentations 2 weeks ahead of time.
Demanding people, damn them, damn those people. The demanding of my presentation. It's my Katharine Hepburn impression to use, guys. All right, yeah, that's it. We're signing off. If you want to get all the goodness of this podcast show notes or dive into any of the other 288 episodes, well, get on over to our shiny new website. It's not new anymore. It's our shiny website. It's old website. It's ThisOldMarketing.site. And if you want your own .site domain, we want to thank the wonderful folks at Radix for empowering our wonderful .site, and you can get your own .site domain from them. So get on over to ThisOldMarketing.site. We'll have all of the show notes that we talked about today and burned through a bunch of those stories and others that you might be interested in. And until we meet again, remember, folks, it's your story to tell. Tell it well. We'll see you next week on This Old Marketing.